So let's talk about buying multifamily. We're talking about 2, 3, and 4 unit residential properties. Now, one of the things that we focus on with our clients is building a real estate portfolio, many of which involve multifamily properties. So today we're going to talk about financing options, some ideas, some insight from that we have that we've learned over time in our experience, and we're also going to talk about some property management and property selection when we're looking at multifamily. Dom, you want to add anything to our intro?
No, man, just good to be here. It's a good Friday. Week was good, and excited to get on stream and try to educate the people. So looking forward to it.
Yes, sir. So now one of the most important things that we talk about with our clients is their plans to grow their real estate portfolio. What are their plans going forward? Are they buying or are you buying a property for the long haul? Are you staying in this property and you're not looking to invest in real estate, or is the plan to grow your real estate portfolio over time? If so, what's that time frame look like? And many times we come up to the topic of the order of which people or investors like yourself buy properties really matters. So the order in which you buy these properties really matter, and they'll determine your ability to be able to invest in more real estate sooner rather than later. For example, if a client comes to us and say, I want to buy a condo at a minimum percent down, I want to rent it in about a year and then move into a single family residence. Dom, tell us what the down payment on a scenario like that would look like.
Yeah, man. Are we discussing FHA or conventional, or should we just go
Depending.
conventional? Yeah, I mean, essentially FHA, 3.5% down. Doesn't matter the units. Could be a 4 unit, 2 unit. Doesn't matter. You could do 3.5% down across the board, which is kind of like what we discuss with first time home buyers. Would be, that would maximize their potential, especially for their return, least out of pocket. That'd be great, especially with the rates for the 4 unit. They're amazing, especially if you're a first time home buyer. Conventional now. Let me just pull up the matrix that I have
So
here.
let me quickly a quick note there. The order in which you buy these properties matter, right? So to that
Oh, you're talking
scenario,
about the order.
if you buy, yeah, if you were to buy a single family residence first as your primary residence, then your minimum down payment with FHA, like Dom said, would be 3.5 or 5% down. If
Right.
now you'd like to buy an investment condo, you have to give at least 20% down payment. So if the order reverses, if you now buy a condo first as your primary residence, that's minimum down payment, 5% down. Now you can buy your single family residence as your new primary. So you'd be renting your condo, moving up to a single family residence. And again, 5% would be the minimum down payment. So how can we tie that into buying multifamily and the order in which we buy multifamilies in, Dom?
Right. So if we're doing multifamily first property for your first property owned, obviously the FHA that I mentioned would work out, right? Now, if you're looking at, do you want to kind of hear a scenario based off of somebody that owns a property and wants to purchase a multifamily second for investment
Sure.
purposes?
Yeah.
So in that aspect, if you would like, and if let's say you're going to depart your single family residence, your current residence, and you want to depart that and go into a multifamily. So we can't do FHA in that aspect because they had already purchased their property. They're going to be departing. They have that in their pocket. They're going to be using that for rental income. So when it comes time to multifamily, there's going to be a bit of jargon, but obviously Mario, I know you can explain and I can explain as well. So what we look at is there's two different types, right? There's Fannie Mae and Freddie Mac. They both require specific amounts of down payment. Essentially, they are the same across the board until you get to 3 to 4 units. So we can differentiate that and kind of discuss the two later on in detail. But let's say you're going to a multifamily 2 unit after you're departing your residence. It's actually going to cost. It's going to take about 15% down. So that's a duplex. So if you want to relocate as your primary residence. So you're going to depart your primary, make a new home your primary residence. It's going to be 15% down. That's with both Fannie and Freddie. So when it comes to 3 to 4 units, that's when it differentiates. So with Freddie Mac, we actually do 20% down. And with Fannie Mae, it's going to require 25% down. and those are 3 to 4 units. So your typical triplex and fourplex or quadplex, however you want to consider them. In essence, with FICO, now everybody's gonna ask, well, what FICO do I need?
Well,
What FICO?
before you go there, Dom, and this is a point that I really try to drive in to the first time home buyer that is also looking to become an investor. The
Mm-hmm.
importance of using your first time home buyer FHA program to buy a multifamily. And the
Mm-hmm.
reason is if you buy a 2 to 3 or 4 unit property with FHA as your first time home buyer, meaning that you're going to move into one of the units of this multifamily, the minimum down payment is just 3.5% down.
Right.
So, as a first time home buyer, you can actually buy your primary residence and be an investor at the same time with just 3.5% down. So, now going back to what Dominic was explaining, if you now if you buy a condo, if you buy what we call a lesser property, and your second property becomes, or you want it to be a multifamily, the order changes. You now cannot do FHA. You have to do a conventional mortgage, and your minimum down payment for a duplex is 15%. If you're looking
Correct.
at a triplex or a quadplex with a conventional mortgage, your down payment is 20%. This is why, guys, it's so important that your first time home buyer program, the FHA, is used on a multifamily purchase, right? It doesn't have to be your forever home. It doesn't have to be the home that you'll stay in for 15, 20 years. But if you use that 3.5% down, it gives you a head start on becoming and growing your investor portfolio, right? So keep that in mind, guys. First time home buyer with the FHA program, your minimum requirement is just 3.5% down. If you're looking to buy with a conventional mortgage, maybe as a second or third property as your multifamily, minimum down payment is now 15%. Right. So,
Right.
Dom, tell us about the credit requirements, credit score requirements, and so forth.
Yeah, essentially, it's going to be for conventional. It's right down the board, 620. So you just have to have the 620. That's just for conventional financing, whether you're looking for primary or not. But it's a plus that if you're looking for that triplex, if you're looking to then get into a multifamily, all you do need is this 620. So typically, we can get you locked in. There will be pricing available, which is great news if you're looking for that type of property. We got it covered, especially if you're looking for 1 unit, 620 cross board conventional. I did want to input there, Mario, with what you were discussing too. A lot of people aren't familiar with the income structure of how a multifamily works. I think we should touch on that. It's so important to kind of put that up in the front of discussing obtaining these properties, because most people say, hey, listen, I only make so and so amount of money a year. These triplexes, quadplexes, they're really running, they're pretty pricey. I don't know if I can afford it. The good news about the approval side is that we can actually take the rental income, the projected rental income from those additional units that you won't be living in, and we can apply that to your loan. And it actually gives you supplemental income to use. So your debt to income ratio, which needs to be a certain percentage, let's say, for example, 50%. Let's say with just your income, you're over 50%. We can use that supplemental projected rental income to lower the debt to income ratio to ensure that you qualify. And Mario, do you want to kind of discuss how we can utilize that, where we can find that rental income, how we can obtain it?
Sure, guys. So, in other words, not only do we use your income to qualify, we're also using the rental income to qualify you.
Mm-hmm.
So, the multifamily properties are typically priced much higher than your single family residences because you're buying more than multifamily, more than one property at a time. Stands to reason that they're a little bit more expensive. However, you don't have to qualify with only your income for these properties. We can take that rental income from the additional units to qualify your loan. So keep that in mind as well. Just because you've been pre-qualified for a lower loan amount doesn't mean that you won't qualify for a multifamily loan, right? So, and again, it goes back to utilizing that FHA and the order in which you buy properties really mattering. You're using that FHA as your first purchase. Go into the multifamily field because you won't get another chance to use that FHA. Well, you may not get another chance to use that FHA loan again because there are restrictions to having more than one FHA loan on your credit and your credit history and so forth. We don't want to get too technical, but in general, you could only have one FHA loan per credit history. Now, per credit report. Now, there are some exceptions. For example, if you move more than 100 miles away, we can now do another FHA loan. If your family size increases, and we can prove that to underwriting. So there are some exceptions to that rule.
Right.
However,
Yeah.
it overall, you can't have more than one FHA loan per credit report. So keep that in mind, guys. The order in which you use the purchase the properties really matters, and your first time home buyer loan it's a huge advantage in this market. Another reason to keep in mind to go into multifamilies first is because investors have to come in with 25-30% down payment if they're looking to buy multifamilies. So what happens in a rising value or property values environment is that more and more of those investors are priced out of the market, giving the first time home buyer that's coming in with a minimum down payment the advantage in purchasing these properties. That's something that I'm seeing in the real estate data here in South Florida. We're seeing less investor purchases in multifamilies because of that down payment requirement. The value of the properties are higher, down payment requirements are higher for investors, and now we can have the first time home buyer with an FHA loan swoop in and get a phenomenal deal on these multifamily properties.
Right. And man, Mario, just, conversation style, how have you seen, I know you and I have looked into the multifamilies, we've done a few loans for them this year. How exactly is the market right now in South Florida for multifams? Whether it's Miami, Broward. I know it kind of all just clusters in together, especially when it's multifamily. Like you said, the prices can tend to get a bit high. You're paying for additional units. That increases the value. But how have you seen that really like the market react to the investors not being able to afford that down payment, or just stating, hey, listen, I'd rather go and get a condo, or maybe a smaller single family home and just Airbnb that. How have you seen that affect the multifamily market here in South
Yeah,
Florida?
and real estate is very local, and
Mhm.
whatever the local market down here in South Florida is doing does not compare to a market up in Ohio or in Tennessee, and so right.
Right.
Real estate is very local. So even though property values are continuing to increase here, rental costs are also increasing. How, keep in mind there is some data that's showing that the rate of which rental costs are increasing is decreasing a little bit, which is good for the market overall. However, we live in a very healthy environment, not only for long-term renters, but also for seasonal renters and also for short-term daily rentals. What that
Yeah.
means is that even though the property values are still going up, the rental cost, the rental income is still increasing as well. So you have cap rates, right? Some measurements of investments, cap rates, internal rates of return, cash from cash returns, etc. All of those percentages are continuing to look very healthy because of the tenant market that we have and the destination market that we have in South Florida. So again, it goes back to the prices are continuing to go up. It's pricing out some investors out of the market because 25-30% down payment is a steep price to pay for these properties.
Right.
While first time home buyers can come in 3.5% down, and now you can get into a neighborhood that other investors can't get into. You're now a primary residence owner, so you get some tax benefits there. If you select the right market, you could be in a phenomenal real estate market for short-term renters, medium-term renters, and also long-term renters. So some of the things that we like to look at when we're underwriting these properties is worst case scenario, if we cannot rent it short term, what's our long term rental income look like? And we always like to look at the worst case scenario for long term to make sure that that pay or that rental income covers the mortgage payment. As long as we can check that box, we're fairly confident that we can get into very good properties in our market right now. Granted, not every market within South Florida is good. It depends on the strategy. If some people are not willing to be as invested in the day-to-day management of the property, then a strategy for medium to long-term rental income would be best. right? If someone is okay with the daily management of an Airbnb or VRBO or Booking.com, that will generate the most revenue for your investment. It'll give you the highest cap rates, it'll give you the highest rates of return, but it does require a little bit more hands-on from you, from the investor. So it all depends. It's always what I kind of like to reference. It
Yeah,
depends.
absolutely,
You
for sure.
know, the investor market down here is still healthy. There are some investors being priced out of multifamily, 2 to 4 units, and it's giving our first-time home buyers a good opportunity to come in and get good properties in good neighborhoods.
Yeah, absolutely. And I think that also kind of, like you said, it's healthy for the market, right? These investors aren't able to just swoop in and pick up any property they wanted to, like say 2021, 2022, 2020 with the pandemic. It's giving the first time home buyers a chance to really be able to start their investment portfolio early. And like you said, some of these investors don't have 25, 30% down. So it's allowing these first time homebuyers to just have that breathing room. Okay, here we can afford this down payment, 3.5% down. 15% is a whole lot better than 30% or 25%, whatever it may be. So, thanks for that explanation, man. I think that's very important too, and it just goes to show that, like you said, real estate market is very local, especially to where you are, and obviously we differentiate from Ohio or wherever else it may be, the West Coast. But in Florida here, it stays to remain healthy, and you can see some positive factors, especially with the points you just stated with the investors and getting priced out. It's giving
Yeah,
those first time home buyers that were waiting on the sidelines prior that now have the funds to be able to say, okay, like we can afford this. Let's get in there before that next drop comes. And investors here, they come picking up every property. They're getting outbid every contract that you put in. So that definitely tends to it too. Um, in terms of getting the multifamily, with requirements, how I feel like it's important to kind of just, especially on stream, to kind of go over how we can, what type of documentation we collect to be able to, allow these people to be pre-approved, what we would need to see. Can you kind of just go over a little bit about like what we would need to see to pre-underwrite the file? Like, most people don't necessarily understand, like we have to present their financials to a bank, we need their bank statements, whatever it may be. So especially in
yeah,
terms of multifamily, I know it's, people are like, hey, we don't have a history of being a renter or a landlord. So what would they need to show them? Or like, what would they need, such as appraisal, insurance, et cetera?
yeah. Well, we essentially pre-underwrite the files at pre-approval or pre-qualification. We want to
Mm-hmm.
sit down with our clients and look at the entire financial picture and determine the best route for them to take, depending on whatever their goals are. Because a goal for somebody that's just looking to buy a single family residence and be their forever home is completely different than someone that's looking to build a real estate portfolio that wants to buy 10 properties within the next 10 years,
Yeah.
right? So we're able to grab the same, at whatever goals are, that same client, take them all the way through their goals. And one of the big benefits that we have as mortgage brokers is having access to many different types of loan types, not only your FHA conventional VA loans. Sure, we do those, phenomenal rates, great cost, etc. But we also have additional loans that our clients can take advantage of. So for your conventional FHAs, VAs, not to get too technical and with requirements, but we look at the 2 years tax returns, W-2s, for most recent pay stubs. If we find that the client has a better option on a different type of loan, depending on the client's credit history, maybe the client has certain real estate portfolio already established. So maybe an FHA, VA is not what's best in that case. We have other options. So we can look at a client's bank statement program, for example, the client's 12 bank statements. We can take all of their deposits, and from there we can derive what their qualifying monthly income would be based on the 12 months bank statements deposit for that client's business.
Yeah.
We could also look at, if someone's a foreign national or if they just want to do strictly an investor loan. We do have a program for those two types of clients that we don't look at any income. We're not looking at tax returns or anything like that. We're looking at the rental income of the property to qualify the mortgage. So if the
Mm-hmm.
rental income covers the mortgage payment, then that person qualifies for that loan. Granted, it's a little bit higher rate. It's a little bit higher down payment requirement. However, it may be what's best for the client, and it all depends on the financing options that the clients can qualify for. Right? I always
Right.
say the best loan is the loan that you qualify for.
Yeah,
So
absolutely.
keeping that in mind, we do have many different options for lending. We focus on growing our clients' real estate investment portfolio, and that's something that we take pride in. So we have many different tools to get our clients there.
Yeah, and I think too, with the qualification purpose, just for the people that want to know more, they could always just, I know we say it every stream, but to just feel free to call us. Like, we're not going to hound you and, oh, you need to do this and that. We're just going to we're informative. That's what we try to do. That's our goal. We want to be able to put these videos out to inform everybody. And I think, we've been talking about doing the stream for a little while. First time homebuyers in multifamily, especially the ones that want to build a portfolio. Like, it's not for everybody, right? But for the people that want to be a portfolio or build a portfolio rather, want to be, have that history of starting at least to be a landlord and start building that history of being one. This is a no brainer, especially with FHA at 3.5% down. I think it's such a great opportunity. You don't need a super high FICO. You just have to have very, very average, good credit. And when it comes time to qualifying, you have additional revenues to be able to, with a projected rental income, to qualify for it. So, just pushing that out there and just getting that information out, I think is so important. And man, that's pretty much all I had for today, man. I don't know if you have anything else you want to touch on, but
No, that's it, guys. Just quick recap. The order in which you buy these properties really matter. And it's important that you guys meet with someone that understands these guidelines, that understands your goals. That way we can get you on the right track to meet those goals. So if you're looking to build a real estate portfolio and you're a first-time home buyer, it may be best to go the multifamily route. If you like more information about how much you qualify for or which areas, which neighborhoods we are currently investing in now, feel free to reach out to us. We'll sit down at a no cost consultation. We'll have the conversation about what options you guys would have. Like Dominic said, we're not going to hound you or spam you with emails and calls. It's all informative. We really like to help our clients invest in real estate. We strongly believe that real estate is a great foundation for our clients' investments. And with that, I won't keep you guys any longer. Good luck. If you guys have any additional questions, feel free to reach out to us. Otherwise, stay safe and have a good one.